Fundsupermart.com.
The Japanese yen has been strengthening steadily since the financial crisis started. What is your currency expectation for the Japanese yen, and is the fund actively seeking companies that may benefit from a stronger or weaker yen?
We don't really look at companies that will just benefit from the currency. First and foremost, we look at good companies. Okay, if they're good companies, there are ways that the companies can tackle a strong yen or even a weaker yen for various companies that may have to import raw materials and so on. So there are ways to do it. And in terms of the outlook for the yen, well, the yen isn't supposed to be this strong given the state of the economy in Japan. But that said, we think that that the yen, there's a concerted effort these days from the Bank of Japan, from the government, to try to push for a weaker yen to help the exporters. But even then, without a push from the government, the companies have adjusted to the strong yen pretty well. You hear a lot of noise in the media about companies complaining about the strong yen hurting profits and so on. They're still actually making decent profits, but they are just. I think essentially what they're pushing for is to make more money, and that's their way of signaling to the government that they need to do something to help them counter some of these costs.
So are there any specific investment themes the fund is looking to benefit from?
I think the main investment theme for Aberdeen overall is to just invest in good companies. We don't look at themes, from strong yen or weak yen or even domestic names and so on. We try to have a balance across our funds in terms of our exposure. And the more important thing is to make sure that we understand the companies that we invest in, that the companies are good, and that we are okay with investing in them for the long term.
What investment detracted most from performance over the last 12 months, and is the fund still holding on to this position?
One of the poorer performance for us over the last 12 months or so is this company called Armada. They make machine tools. Essentially what they do is they export a lot of their products. Now with the strong yen, that has hurt this performance. And what it's good at is essentially they're making it's exactly why you buy into Japan or buy a Japanese product. Good quality products. They might have more basic technology, but they make the higher end stuff. And what that means is that with a stronger yen, it hurts profits. And on the flip side, demand hasn't been that strong because of the shaky global economy, and that dragged on our performance last year. Now this year, with the upturn in the global economy and the yen actually remaining still pretty strong, despite the recent slight weakening, it's still pretty strong. But Armada has actually recovered from difficult period last year, and they're seeing stronger demand coming from the US, coming from within Japan itself, as the global economy picks up. So what was difficult? Yeah, we continue to hold the stock, and despite the difficult year last year, and we are actually benefiting from holding the stock this year. So and this is essentially part of what we do, just buying and holding. Make sure the companies are good, and we just buy and hold it for the long term and top up at opportune times in the market.